Hey, in this video you are going to see everything you need to know about investing in gold. So we are going to go through the valuation and the price of the gold, the inflation adjusted price, what drives it and why it might be good, might be bad. And then I'm going to show you, if you want to invest in gold, why or how you should do it.
Gold. So gold officially is at roughly $4,000 an ounce. Rob, can you go pull up how much a gold?
$40.54 today, this morning.
$40.54
$4,054.
And by the way, I have a ton of gold myself. I'm a fan of it. I have a ton of gold. And I would buy them and I would set them aside. $4,060 today. So this right here, can you look at what the price of a kilo of gold is? Price of kilo gold is, to the right, the kilo gold bar today. See right there?
We will soon more with the videos of Warren Buffett and Sven Carlin. But here I just wanted to show, even though the Valuetainment is a great podcast for entrepreneurs, and if you want to learn about business, it's absolutely amazing. They are so great in business. But in investing, they're horrible. They are horrible. It's actually like amazing how bad they can be in investing. But again, by the way, I watch them every day, so I absolutely love their podcast. But investing advice of them is horrible.
You go. What is it today? Holy shit, it just hit 130,000. It was 128 yesterday. So this thing right here made $2,000 in a day, okay? I bought this at 50,000 just a few years ago. And I set them aside. $130,000 now today. And when you're reading this,
so let's start with our first video, and what's gold video without comments from Warren Buffett. So let's see Warren Buffett's comments. And by the way, check the top comment here. Normally I wouldn't invest in gold, but we are in strange and volatile times. That's true, but that's not too good of a reason, and you are going to see soon why. And by the way, there is a way of investing in gold, but overall it has very low returns over time. So if you are an absolute investor and you care about your returns over time, then you would not invest in gold. Except when there is certain periods of time when it's actually pretty okay to do.
Do you think that gold can be considered a viable investment alternative to paper currencies?
Yeah, we're not enthused about gold. People historically have felt that was the first refuge from a currency that was going to be decline in value. But so's a barrel of oil, so's an acre of land, so's a piece of Coca-Cola, so's See's Candy. See's Candy, if the dollar goes down 50%, we will be selling See's Candy for double the present price. We'll be getting the same real price for See's Candy. People will work the same number of minutes or hours per week in order to buy a pound or a 2-pound box of the candy. So we would much prefer some asset that is going to be useful.
Yeah, that's true. If you invest in businesses, then you have no problem when there is going to be market break. For example, me myself, I currently have a business in my portfolio. It's probably the biggest business I have. The intrinsic value for it it's 50% down from its intrinsic value, and I calculated the value with 10% discount, so you can imagine that. And the fun, not more about that one. But good businesses will do good results. But that's, of course, you need to know how to invest in good businesses. If you don't know, then the index investing is good, it's great. Even though Warren Buffett, or even though the indexes might give you very bad returns over the next 10 years, it's still better than the average 2% that normal investor gets, because they try to, pick stocks. Never try to pick stocks, especially if you are looking into the Apples or any company in the top 10 of the S&P 500. If you are looking at those companies, then just don't invest in the stocks, because you don't understand investing.
whether the currency is worth what it is today or 10% of what it is today, or whether people are using seashells in order to transact business, because people will go on eating and they'll go on drinking and doing various things, and their preferences will translate in real dollars.
And by the way, there is an all-weather approach from Ray Dalio, investing in gold, when normally gold doesn't have a yield, and it doesn't. But in all-weather approach, it kind of does. And even though the gold is a straight line for 20 years that it historically has been, gold doesn't produce anything, like Buffett said. That's why he doesn't like gold. And it can be straight line for 20 years, and it has been. But all-weather approach might be the solution. But you will see that in the video, so just stick around and keep that in your mind.
Into more or less the same economics for us. And we would not trade the only who are looking to flee from the dollar and in our view really haven't thought through the consequences of what fleeing would, where they should flee. Charlie?
Yeah, if you have the opportunities of Berkshire Hathaway, averaged out, gold is a dumb investment.
Yeah, and this is another thing. There is a lot I could show for you, Berkshire, Charlie and Warren Buffett talking about gold, but we need to continue the video. They don't like gold. And that's the problem with me when people are saying Charlie Munger or Warren Buffett are too old to understand crypto. They put crypto kinda into the same category. Because it doesn't produce anything. Investing is hard enough. And if you want to be a great investor, you absolutely need, your first rule is to not to lose money. And if you want not to lose money, you need to be able to calculate your returns. I would much rather know that, okay, I'm going to make 15% returns for the rest of my life than try to guess, okay, hopefully I'm, getting 20, 30, 50% with crypto coin for the next couple of years. It's just not certain enough. And by the way, if you calculate, if you are young, if you have 1,000 euros in your investment account, and if you get over 15% returns for the rest of your life, and you don't invest anything else, you have the 1,000 euros and you stop investing completely, you have over $1 million when you are old. And imagine if you continue investing, continue compounding, and you are not just, waiting for the 15% return each year to happen. And that's the power of investing. But why almost no one gets rich with investments? Because they try to, they try shortcuts. They try to go to Vegas. And, crypto coin is like going to Vegas. You don't know what it's going to do in the future.
Surpass 5,000 sooner rather than later, and 10,000 in the long term. But the key question now is, should you own gold in your portfolio? What I'll give you today is a value investing perspective on the 5,000 and 10,000 gold targets in the future. We discussed gold as I used it as an example to discuss also the ridiculousness of Wall Street targets. You can check that video in my free value investing course. I have added it here on investing mistakes to avoid when you listen to Wall Street. Get the data, not the recommendation. Anyway, there were so many comments, a barrage of comments telling me how, Sven, gold did better.
If you want to learn about investing, the value investing course from Sven Carlin is super great. It's amazing. It's amazing. I have went through it all.
Than the S&P 500. Honestly, I'm very surprised you don't own gold. For someone like you, who has a very realistic view on valuations and world debt situation, not owning gold seems crazy. Wall Street stocks pump and dump, things like that.
Just shows the ignorance of the public. And why I hate that someone like PPD, Valuetainment podcast, smart people are, advertising gold like it's the, end all be all for your wealth. It's stupid.
If you're not able to explain why demand price of gold has risen, I can see why you come up with this video. Even Buffett made a lot of money on the Barrick trade. That's something different. Berkshire, maybe some insurance company had it as they made an acquisition. We discussed that. It's absolutely wide to claim gold has no utility, great discussion, but of course, as a preservation of wealth, plus some industrial application. Over the past 2 decades, gold has shown its worth. It reveals truth when the economy is based on inflated lies and inflation. When retail investors wake up to gold, watch out, we could see 10,000 or even 15,000. And so the comments kept on going. The key question is, should I own gold in my portfolio? And I agree with everyone saying 5,000 and 10,000. Now let's see about gold's performance across the cycle, the risk and reward of having gold in a portfolio, the all-weather strategy around volatility, which can give you a yield on gold, and how, yes, 5,000 for sure, but should I own it? First, if we look at gold, let me clear out inflation, and this is the price as you are seeing it. It was fixed at $35, 1971, the Nixon shock, free trade of gold, and then from 36 to 800, I think, then down to 200 in the 2000s, and now we are again up to 3,000 something. So it is, yes, 100x over, what is this, 60 years. Crazy down to 1971, the Nixon shock, free trade of gold, and then from 36 to 800, I think, then down.
You see, there is 20 years of gold going down. And then there is 10 years in recent years. So it's something like, yeah, it's a great investment. It might be a great strategy. Again, remember the all-weather approach we are going to talk soon. But it's just not something that I want to wait 20 years for my investment going down, you know? When I have possibility to make 10 to 15% returns each year, which is, by the way, not doing in an index investment, but its indexing is much better than gold, I would say.
100 in the 2000s, and now we are again up to 3,000 something. So
let's
it is,
wait
yes,
when Sven Carlin shows you when we take the inflation out of the equation.
100x over, what is this, 60 years. Crazy, crazy performance. However, let's also click on the inflation adjusted chart, and you can see here that it boomed significantly. It was already there. So if you adjust for inflation, gold didn't do much over the last 45 years. Plus, when people don't like gold, when they prefer internet stocks, it goes down significantly.
Protection for inflation, like you have said, 45 years of basically zero returns when you adjust for inflation. Maybe that's something you want. Or maybe you want to turn your 1,000 into 1 million.
Then people like gold again, then less for a few years, and now we are again in a situation where central banks, especially globally, like gold. Of course, I know that gold will go to 5,000, and the reasons for that are pretty simple. We discussed the video how if governments spend less, that leads immediately to a recession, which means no politician will spend less, therefore deficits, as those are forecasted, will just expand. Interest on that debt that is piling is increasing exponentially, which means it's a Ponzi scheme. When there are issues, what does the Fed do? They simply print, and the next day will again print. Thus, I could bet you gold will be at 10,000, 5,000 sooner rather than later, 10,000 for sure. Now, when it comes to value investing, first and foremost, value investors focus on risk. So let's discuss also the risk of gold. And now, if it goes to 10K over the next 10 years, that's a 3x over 10 years, that's 11.6% per year. Not bad, but it has to get to 10K over the next decade. It is also possible that we have 3,000 in 5 years, which means there are zero returns. That is also a risk to consider. If you look at gold in the 2000s, from 1,800, it almost touched 1,000 here, and it was constantly just above the cost of production for miners.
Yeah, the thing in gold is that
now we have gold prices that have skyrocketed over the last year.
It just might go down 80%. Like that. And as it doesn't produce anything, it's, you know.
Year and a half. And the thing is that if you have a hedge and the price of the hedge triples or doubles, the hedge simply loses its efficacy. It's not as good as it was when it was cheap. And as they say, when it comes to gold, when nobody wants to touch gold with a 10-foot pole, then it's the time to look into. Now everyone is pretty excited about gold. They might still be right as it will reach 5,000, but how right is the key question for your portfolio. So here are the scenarios: 11% per year, perhaps 0% of the next 5 years. Perhaps if this upside reverts, we are down 30% in 2 years. This would be the risk and reward. And another thing is that there is no reward, there is no dividend, there is no yield, there is no value creation in between. where gold didn't do much for a few decades, here for almost a decade. Another idea is the all-weather strategy. So you put, let's say, 10% of your portfolio in gold. If gold goes up, it goes to 15, you sell, bring it down to 10%, and then you already make a gain there. 50% on that is 5% of your portfolio, which is a good yield. Not stellar, but good.
The all-weather approach, like I said in the beginning of the video, that might work. If you want to put some gold in your portfolio, you will basically trade using gold, and even though the price will be the same for the next 20 years, that would not matter too much, because you are always, making sure your allocation remains the same. Like he said, 10% when it goes to 15, you sell. When it goes down to 7, you increase your allocation back to 10%. And then always when it gets up and you can sell, you get the returns, you sell, and you bring it back down. That is one way, and the best way of basically doing gold currently, especially with these prices. But still, I probably would wait of investing in better things. So yeah, thank you for the video. Please like, comment, and subscribe for the channel. What you like the video, and if you have anything else to say, just say. And bye bye.